All right, we back. Hopefully you can actually hear me. I'm gonna do a revamped version here, a slower paced version of how to set up the quant system. I'm getting a lot of questions on that, basically saying I'm going too fast, you can't hear me, all this stuff. Anyway, so hopefully this will be the final cut of this video, how to set this up, and this can be the one that everybody goes to on how to get this going. Uh, so here we are, we're starting here with Greg's video. You need to find this video to find the link. I will be posting this video and the link to download the quant system. Basically, you find this link right here in the description. You click on it. It's going to pull up the Lulu page here, lulu.com, and you find intraday quant system. It's for free. Also, go ahead and grab this one. It is $5, totally worth it. How to trade credit spreads. That way you support Greg a little bit. I've got all his ebooks and I've donated money and all this stuff. I support Greg. You know, go to his channel. He's almost to 100,000 subscribers. Get this man to 100,000. Anyways, here's the quant system. You just add to cart and you basically just get the PDF. So he put it in PDF form. Continue to check out. You'll probably need to create yourself a Lulu account here. Place order. I haven't even bought this yet, the PDF, because yeah, I've already got it set up. But there you go. So ebook is ready. You got the PDF for free. You hit download, you pull it up, boom, there you go. And so now we're going to go through this step by step. Okay, as it says here, many months research development. He's been trading a lot. He's been testing a lot of stuff. This is completely free. He talks in here about most technical trading systems rely on past price movement events in order to assist a trader in making correct decisions in real time. This is the one thing I like most about this system is that it is going to take out a lot of the price movement and variations that you see with candlestick patterns and just time-based price patterns, because it is really going to slow things down in the market, especially something like SPY, which is it doesn't really move a whole lot. Like, a single tick is 1 cent. A single Renko bar that is going to print is only going to be 20 cents worth of movement. So it's a good place to start if you don't trade very much. This is a good place to go, is to use something like this and just trade SPY only with it. You can see, technical trading strategies rely mostly on past price action. This quant system relies and gathers and utilizes and makes available to you, the trader, real-time information to execute trades. So it's basically putting as much emphasis as possible on current price data, and eliminating as much noise as possible. So as we come back down here, keep it simple, stupid. KISS, if you guys have ever heard that acronym, definitely this definitely does that for you. So what you do is you get this simple system and you master it. You create a whole bunch of really good, solid, tight trading rules, risk management rules, entry and exit rules, stop loss rules. Get yourself a nice set of solid rules, trading rules, and then you utilize this system, and I promise you will make money. I don't think you're going to get rich, but at least you'll get yourself making some money, um, making trades, winning trades, in a row. Like today, I was using this system for Amazon of all things, and I had six winning trades in a row for $1,000. So not each, but for total. So it's a really good system. Now you're not gonna be able to quit your job on that because days like that don't come every day. So, but uh, like I said, it'll turn your trading around if you're not doing so hot, or if you're brand new, it's a great way to get started. So um, here's a little bit of a preview of what it's going to end up looking like. Um, these little boxes here are called Renko bars, and they're basically they're only going to print a box once the price has moved a certain number of ticks. Now you can designate how many ticks, and I'll show you that later, but in this system it's going to be 20 ticks. So every time this moves 20 cents in one direction, it's going to print the box. If it doesn't move 20 cents, it's not going to even print anything. You're not even going to see another bar for, in some cases, for the entire day. If SPY is just staying within a 20-cent range all day, you won't even get a single box print. So this right here is an example of a pretty hectic day where it was moving quite a bit. It was giving you a lot of entry and exit points. You also got the oscillators at the bottom. There is the, we'll go over each indicator, but basically this is going to give you an idea of what's underlying these movements here. So this will kind of give you a better confirmation, some more corroborating evidence, so to speak, of when to get in and when to get out, giving you, a more clearer perspective of what's really happening with price movement intraday. I do have another video out there that talks about maybe you can use the system for swing trading when the markets are moving kind of slower, like they were right before Christmas, and so on and so forth. When you're only getting one box printed a day, one bar a day, then obviously not many opportunities to trade. But so here he highlights how he wants to trade it, these golden zones. Right here, you're going to see where all these lines, I'll go over what each line is again in detail, but all these lines are pointing up. And right here, you got the Renko bars in upward movement. All the bars started up, they start moving above this moving average here. So he's basically saying you're going to want to try to get into this type of zone. And he calls it IPO, or in, profit, out. So you get in, you ride it until it tells you to get out, and you take your profits. The profits are going to be small. If you're trading SPY and you're trading with a small account, you're able to buy one or two contracts. Plan on making 20, 30 bucks a trade. I mean, you're really not gonna be hitting home runs with this system. So that's the idea, though, is that they're safe. They're safe trades. They're not going to make a home run, but you can walk away with 100 bucks a day pretty relatively consistently. So again, here's another example on the downside. You can see all the lines are pointing down. Renko bars are down. They're below the moving average. You got the arrows as confirmation. So you got this golden zone, as he calls it, on the downside. So you had an opportunity on the downside. You had an opportunity on the upside. This particular day that he chose had 5 trading opportunities. So each one of these, depending on your account size, making consistent profits. So I believe this is what he is using every day as his trading system. And I'll go over a little bit more on how I think he actually is trading it. I do have another video on how I think he trades it as well, but I'm going to try to just incorporate it all in this video. I ended up buying the recording software because I was only using the free version and only had a max of 10 minutes, but I'm going to go ahead and make a longer video here just to kind of slow things down. I was zooming through them before just because of that reason. I wanted to try to get all the information in 10 minutes, but it seems like people want more information. So yeah, learning to recognize these zones are key to the system. It is, he says, is specifically an intraday trading system. So he's basically saying, look, just use it for intraday movements. I am going to contradict that a little bit in some of my other videos just because I've been experimenting with things, but for the purposes of anybody out there that's new to this system, stay strictly with this until you get the hang of it. That's what my advice would be for anybody that's new to the system or new to trading in general. So eventually we'll get to this setup here. I'll show you how to set that up. He uses Renko bars, so I'll show you how to set this little area up right now. We're going to come into Thinkorswim. I highly recommend having Thinkorswim for this. It's just going to be so much easier to set up because it's just going to, having the Renko bars is huge, and not all platforms have Renko bars. So most of them are going to have the ticks and stuff like that, but the Renko bars are really big. So here's a basic chart here. I'm going to just go ahead and pull up SPY and Thinkorswim. We're going to bring this up here. So this is what a basic chart looks like, right? With the, it's a 5-day, 15-minute candlesticks. It's showing after hours, post-market, pre-market, and then the intraday trading. It looks pretty choppy. We're going to smooth this out. First thing you want to do is, let's go pull up that PDF again. Where the heck is it? So we need to find this box here. So I'm going to show you exactly where it's at, where it's going to show this right here. So come in here. You're going to want to come to this little gear right here. All right. You're going to want to come to time axis up here, and you can see where it says aggregation type. Aggregation type, time interval, price range, and range type. Very important. So time interval, you want to select range. You want to select for time interval, you want that to be 1 day, and then you want this to be 20 ticks. So that's going to give you everything you need right there. 20 ticks, 1 day range, and then this might be pre-filled as range bars. You want to make sure that gets changed to Renko bars. All right. So first things first, then you're going to hit apply. That's going to change up your chart quite a bit, but that's good. This is going to smooth everything out. This is only taking in all that jazz you just saw with the candlesticks. This is all it was as far as the 20 cent ticks or 20 ticks. This is the only bars that it actually prints. So it smooths things out a lot more for you. So it just makes it a little bit easier to trade. Next is going to be let's see, moving on. Now here are our indicators here. So what I'm going to do, just to make this a little easier, I think. Now we'll just leave it this. Let's just go in here. We'll look at each one here. So standard deviation channel. You want to go to your studies, and then hit edit studies. Leave this box up right here. And then we're just going to type in this little area here, standard deviation channel. It should pull up. You just type in stand and then add selected. All right. Next one is the Darvis box. We don't need to make any edits to the standard deviation channel. That one will come with all the settings you need. Same with Darvis box. So let's add that one next. That needs to be on there as well. Pivot points doesn't need to be updated either. So let's add that one next. Pivot points. And these two, I think whole is the only thing we need to adjust with these 5 indicators at the top here. We need to make 2 more adjustments down here, but let's go ahead and add whole and then PPS. Whole moving average should just automatically come up. It's the only thing with the whole in it. That will have to be updated, and then PPS, add that in there. So whole does need to be updated. As you can see, it comes pre-populated as close 20.0. This is close 6.0. We need to go in here and update that. So hit the gear over here on the side, come in here, you got price, length, displace, change that to 6. There you go. I hit OK. So now our top price indicators are all set up. We need to go ahead and add the lower ones. And that's going to be the Chan Momentum Oscillator, Fisher Transform, and Accumulation Distribution by pressure. So let's go ahead and add the Chan in there and update it to what it needs to be. Chan, add selected. And it comes pre-populated with a 20. It needs to be a 2. So to change that, come to the gear over here and hit a 2. And then hit OK. And the next one we need to add is Fisher Transform, and then we'll update that one as well. So type in Fisher. You want to make sure to select this Fisher Transform, not the FW one. Add selected. It needs to be high plus low divided by 2 of the 2 periods. So we need to mimic this setup here. So it's already set up as high plus low divided by 2, which is nice. You just need to change the length to 2. Well, there you go. Next, accumulation distribution. This one's super easy. We don't need to make any adjustments to it. Just type in accum, and it's this distribution by pressure one. So put that down there in the lower boxes area here. And then what you need to do is combine these. So, right click, drag them together. If you just put them all together, then they will show up like so. We're going to zoom out here and bring this into focus a little bit better so you guys can see what it looks like. Now we've got the system set up, and all you need to do is come in here and color code this the way you like it. If you just want to leave it the way it is, it's probably fine too, but you just need to come in here and color code it. So now you've got it all set up. We have the standard deviation channel already on there, so you can see this yellow standard deviation channel. We've already got the Darvis boxes, so that's this green and red box. It kind of keeps, it's a box, so it's kind of keeping price boxed in. Pivot points are on there, so that's the little dots here. Good. We've got the whole moving average. It's one of these moving average lines. I don't even know which one it is, to be honest. We'd have to go back and look here. Let's just change it here so that we can see. So it's giving us an up and down. So what we need to do is change the PPS so that we know which color that one is. I'm going to change it to black. And hit apply. All right, so the whole moving average with Thinkorswim automatically gives you two lines here. One's going up, or I'm sorry, one line. One's going up, it's going to be blue. When it's coming down, it's going to be purple. Let's see what else we got here. A person's pivot study, that's that PPS. So that's going to be the black line that we just changed. And I think if you come in here to studies with PPS, it's got two moving averages. So you've got the black and the yellow. You don't really even need the yellow, but I leave it on there just because it, just the more confirmation, the better. But he doesn't actually have it on there. He just has the one line. So he doesn't really say which one he's using, the slow or fast, which is the reason why I just left it on there. So we already took care of this. That's already there. He, set it up with his own colors. You could set it up like him. Obviously, you know how to download this, so you can go through this and set up the colors how you want to. Same thing with these colors as well. Now I've got it set up the way I like it. I started off exactly the way he did it, and then I started changing it just to make it a little bit easier for myself. Let's go over the risk management portion here. How do you trade it? First, paper trade with it. That's a great idea. Learn the system, recognize the golden zones. Once you're confident, with the quant system, give yourself some time, then go real cash. So in the money calls or puts, okay, and he's going 1 month out expiration. So those aren't going to be cheap, but you could still, like I said earlier, gain 20, 30 bucks a pop, maybe even more. I've hit, 80, 100 bucks on a trade before with it. So again, and if you have a larger appetite for risk, you can buy an option that expires sooner. So 7 days, even days or weeks out. So I'm in the days or weeks camp. I'm a little bit more risk tolerant. So and then he says if you have lower risk tolerance, just go as far out as possible, because that's just going to eliminate the gyrations in the price of the option. So definitely keep all that in mind. And then he says don't hold the positions overnight. So you're just trying to take small moves and leverage the options. So in, profit, out. So like we talked about earlier. You will suffer losses. So this thing will throw you some fake signals, and it will fake you out as well as it's printing its next wrinkle bar. So every wrinkle bar that gets printed here is just going to generate some more movement down here as well that's going to coincide with it. So sometimes this will fake you out. Sometimes on a wrinkle bar it'll start moving up. It won't quite hit the 20 ticks to print the bar up, but this will start moving up, and you think you're getting stopped out of your trade, or the thing is reversing on you or something like that. Best advice I can give you is to stay with it as long as you're underneath these moving averages. Everything is pointing in the direction you want to go. If you got this Chan momentum oscillator, that's what this yellow boxy looking thing is. If that thing is at the bottom here, then you're good. Stay in the trade. And there's some other tips and things that I can go over at some other point on some better ways to trade it, but try it out. Start getting yourself a nice little trading plan going with it. Give yourself like 20 trades, either with small amounts of money or with paper trading only, and keep track of every trade. Make sure that your variables are always the same for 20 trades, and just try to make it work. And then every 20 trades, adjust what you're doing. That's going to be my best advice for this. But hopefully this helps you out a little bit in how to set this up. And hopefully this is my last time doing this video. But by all means, if you guys have any questions, leave them in the comments. Like and subscribe. I'm appreciating it. I've hit I've started this month out with 2 subscribers, and I think I'm at almost 60 now. So apparently, someone out there is liking these videos. So appreciate the love. Happy New Year, and hopefully next week you guys can use this system to make a little money and start turning around your trading or making your trading better. All right, bye.